What up, guys? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. I appreciate you being here. Hook me up, hit that like, hit that subscribe, select all, make me a comment if you will. We're going to talk a little bit about crypto, go through the events of the week. If you haven't watched my last 4 or so videos, going through the entire FTX situation from top to bottom with all the current news as it developed. I'm going to do a recap. We're going to look at some charts and just take a look at some of the events that are taking place. So, Bitcoin is still in the range that we talked about the other day. These two micro supports came down, bounced above, retested, fell, retested, trying to get above. And that range right there is 16,174 to 16,724. So it's a little sticky box of confluence. We will get out. There has been some movement in some of the other ones, such as Matic. Now, if you look on the daily, still looks pretty sloppy. Nothing's getting out too easily right here. You can see a lot of uncertainty, indecision in the charts. But if you back it up to the 1 hour, you can see it is trying. Still under the 200, but the Jedi green lights has flashed. You go back to the 5 minutes, you can see it is trying. And there are some other ones that are trying as well. But until there's more certainty in the market and more developments and news that comes out, whether it be specifically about the executive team at FTX or Alameda or the transfer of funds or the root access or the loss of money or an arrest or a police interview or some form of acknowledgement to what has happened or a solution, we'll keep you up to date. But until then, what we're going to do is just kind of take a look at all the events. So these events, which transpired in the digital asset industry between November 6th and November 14th, 2022, are nothing short of remarkable, shocking, and disappointing, to say the least. Within just the span of 1 week, one of the most popular and high trade volume exchanges, FTX.com, experienced a bank run, halted customer withdrawals, entered into failed talks to be acquired by competitor Binance, discovered to be short between 8 billion to 10 billion in customer funds, had exchange wallets allegedly hacked to the tune of 500 million, filed for Chapter 11 bankruptcy alongside sister company FTX US, exposed what appears to be malfeasance perpetrated by the Alameda FTX entity. Such an event is a tremendous blow to the industry, leaving millions of customers with trapped funds, damaging many years of constructive industry reputation and creating new credit contagion risks, many of which likely still remain undetected. The event brings back unfortunate memories of the failure of Mt. Gox. Amidst this chaos, it is important to remember that the digital asset space is a free market, and this event represents a failure of trusted, centralized entity. There are no bailouts for Bitcoin, and the forest fire of an industry-wide deleveraging will purge all excess and malfeasance, albeit with significant pain along the way. With a renewed focus on exchange proof of reserves underway and a push towards self-custody, the market will heal in time. It will recover and return stronger in the months and years ahead. We're going to cover details regarding the bank run on FTX on-chain wallets. We're going to take a look at the wider impact on exchange balances and self-custody. And we're going to look at the observations and impacts to Bitcoin long-term holder conviction. So here in this graphic, you can see the orange line is the Bitcoin price, okay? And the blue line is the Ethereum price. And the green is the FTT token, okay? So you can see that Bitcoin was pretty stable. Ethereum was as well, but shot up after Bitcoin rallied with it. They kind of paired together, kind of hovered together, and then they started having problems. Well, FTT was moving right along, pretty steady, pretty stable, until we got to about here in the early November area, which this has caused a cascading effect, not just to the FTT token, but to the price of Ethereum and Bitcoin and everything else in the crypto space. So ETH dropped 25% just from right here. Okay. Now you can see that Bitcoin and Ethereum held, and they had a range from 20,700 to 16,250, which was still a 21.5% drop, whereas FTT has completely collapsed. So let's talk about the fractional reserves. The truth regarding how FTX managed to blow a hole between 8 to 10 billion in their balance sheet and lose customer deposits will hopefully come to light in time, although much evidence suggests a misappropriation of funds via sister hedge fund Alameda Research. For more information, you can watch my last 3 videos on this. Tracking the exchange reserves for FTX has been somewhat of a challenge for many data providers over the years, with our own experience being that FTX utilized a relatively complex peeling chain system for their Bitcoin reserves. In April to May this year, the FTX reserves within our cluster had reached a peak of over 102,000 Bitcoin. This dramatically declined by 51.3% in late June. Reserves have since persistently declined until reaching effectively zero during this week's bank run. As claims of Alameda misappropriating customer deposits come to light, this indicates that the Alameda FTX entity may have in fact experienced severe balance sheet impairment in May, June following the collapse of Luna, Three Arrows Capital, and other lenders. The supply of Ethereum held on FTX has also experienced 2 periods of significant decline. In June, where reserves dropped by 576 Ethereum, a decline of 55.2%. This week, falling from 611,000 Ethereum to just 2.8, a decline of 99.5%. Similar to the Bitcoin balance, this leaves close to no Ethereum in FTX-owned wallets, with the bank run effectively clearing what was left from the balance sheet. Right here, you can see the price of Bitcoin in black, and then in the blue, you can see the exchange balances in the wallets just completely declining all the way down to 2,800 ETH. When looking to stablecoin reserves, we can see the aggregate reserves of FTX started to decline significantly from October 19th, dropping from 725 million to effectively zero over the following month. Stablecoin balances spiked significantly to a new sustained height after the June sell-off. At a time where Bitcoin and Ethereum reserves had dropped precipitously, this may add further indication that a degree of balance sheet impairment had occurred at the stage, necessitating a swapping or lending of stablecoins for Bitcoin and/or ETH collateral. Whilst there remains significant uncertainty regarding what really happened between FTX and Alameda, there remains a growing pool of on-chain data to suggest cracks had formed as far back as May and June in the summer of 2022. This would leave recent months as being simply a precursor to what was more than likely an inevitable collapse of the exchange. Safety in self-custody. On an industry-wide scale, we have seen a withdrawal of coins from exchanges at a truly historic rate. As holders seek the safety of self-custody, the following charts map out the aggregate balance change of exchanges, investor wallet cohorts, and miners since November 6, when rumblings of trouble at FTX were still in their infancy. Exchanges have seen one of the largest net declines in aggregate Bitcoin balance in history, falling by 72.9 thousand Bitcoin in just 7 days. This compares with only 3 periods in the past: April of 2020, November of 2020, and June to July 2022. A similar observation can be made for Ethereum, with 1.1 million Ethereum being withdrawn from exchanges over the last week. This makes for the largest 30-day balance decline since September 2020 during the peak of the DeFi summer, where demand for Ethereum was sky high for use as collateral in smart contracts. While Bitcoin and Ethereum exchange reserve declined this week, stablecoins have on net flowed into exchanges with over 1 billion in combined USDT, USDC, BUSD, and DAI flowing in on November 10th. This makes for the seventh largest daily net inflow in history. This has pushed stablecoins held across all exchange reserves to a new all-time high of 41.18 billion. We can also see a notable increase in Bitcoin USD dominance with over 21.44 Bitcoin held in exchange reserves. This is likely a result of Binance's recent stablecoin consolidation towards BUSD, as well as its growing dominance as the largest exchange in the world. USDT exchange reserves had declined slightly and USDC reserves more dramatically over the recent months, indicating a potential shift in market preference is underway. Interestingly, a great deal of these stablecoins are being sourced from smart contracts and have been withdrawn from Ethereum smart contracts at a rate of 4.63 billion per month. This acts to highlight how acute the demand for immediate dollar liquidity has become. As a result, the market has entered an interesting state whereby centrally issued stablecoins are flowing into exchanges, while the two major crypto assets, Bitcoin and Ethereum, are being withdrawn at historic rates. The chart below is a two-part model reflecting the following. Number one, a lack of Bitcoin in the barcode trace indicates that exchanges have seen a net Bitcoin and Ethereum outflow. Number two, the oscillator shows the net inflow of stablecoins minus the net USD flow of Bitcoin and Ethereum. Here we can see the net buying power of stablecoins on exchanges has increased by 4 billion a month. This demonstrates that despite market turmoil, investors appear to favor holding trustless Bitcoin and Ethereum assets rather than centrally issued stablecoins at this time. This is quite an intriguing signal and could be argued to be a constructive sign of confidence in the base layer assets and a case for the market seeking safety in self-custody. Bitcoin balances swell. With such large volumes of Bitcoin flowing out of exchanges, we can see that across all wallet cohorts, the FTX event has triggered a distinct change in investor behavior. On-chain wallets from shrimp to whales have experienced a net balance increase throughout the FTX collapse. For some cohorts, this has been an almost perfect 180-degree turn from a regime of sustained distribution over recent months. Shrimps, with people that own less than 1 Bitcoin, have added 33.7 thousand Bitcoin this week alone, resulting in a 30-day increase of a positive 51.4 thousand Bitcoin. This level of balance inflow is the second largest in history, surpassing the peak of the 2017 bull market. Now, the crab, which are Bitcoin holders of 1 to 10 Bitcoin, are also similarly aggressive, pulling 48.7 thousand Bitcoin off exchanges and approaching acquisition rates in line with the 2017 bull market peak. Entities holding less than 10 Bitcoin now command over 15.9% of the circulating supply, a new and convincing all-time high. Wallets holding between 10 and 1,000 Bitcoin are referred to as fish and sharks. This cohort reflects entities with balances on the order of high net worth individuals, trading firms, and institutional investors. After several months of slowing balance growth, this week has motivated a significant cohort balance increase of 78,000 Bitcoin and one of the largest 7-day balance increases in history. Now, for whales, defined as those with over 1,000 Bitcoin, we have only considered coins directly flowing in and out of the exchanges. This is to better reflect true investor activity for these large entities. Whales have actually been net accumulators over recent weeks with a 30-day balance change of 53.7 thousand Bitcoin. Their on net participation over this week, however, has been an order of magnitude less than the other cohorts, with only a modest balance increase of 3.57 thousand Bitcoin. And lastly, on the balance change front, we have Bitcoin miners who are already an embattled industry and under extreme stress due to recent coin price declines. As hash prices push to all-time lows, miners have been forced to liquidate around 9.5% of their treasuries this week, spending 7.76 thousand Bitcoin. This is the sharpest monthly miner balance decline since September 2018 and demonstrates the pro-cyclical nature of Bitcoin miners. Okay, let's look at Hodler's resolve and inspect whether there has been a discernible loss of conviction. Given the scale of impact and far-reaching consequences of the FTX implosion, if there was a time for hodlers to lose faith in the asset, it's likely right now. Long-term holder supply, being that which is statistically the least likely to be spent, has declined by 61.5 thousand Bitcoin since November 6. Approximately 48.1 thousand Bitcoin was spent over the last 7 days, which certainly registers as a non-trivial event. However, given the scale of balance change detailed above and comparing to historical precedents, it is not yet of a scale to infer widespread loss of conviction. Should this develop into a sustained LTH supply decline, however, it may suggest otherwise. Over the last week, 97.45 thousand Bitcoin, which were older than 1 year, have been spent and potentially returned to liquid circulation. This represents a 0.83 sigma move on a 4-year basis, which is notable, but not yet a historical magnitude like the LTH supply. This is a metric to watch in case it develops into a sustained trend. The average per Bitcoin has also climbed to just over 90 days this week, which is triple that observed during the low volatility environment through September to October. The uptick in older coins being spent is noteworthy and is in line with peaks seen during previous capitulation sell-off events, and even the 2021 bull market profit-taking. The sustained uptrend or elevated level of dormancy may indicate a more widespread panic has taken root amongst the hodler cohort. Finally, we can return to our 4-year Z-score construction, but this time for a weekly sum of Coinbase destroyed CDD. Here we can see that after a lengthy period of an extremely dormant coin supply, the volume of Coinbase destruction this week hit a positive 1.9 standard deviation above the mean. A total of 165 million Coinbase have been destroyed this week, which is equivalent to the spending of 452.2 thousand Bitcoin that had been held for 1 year. Overall, there has certainly been a degree of immediate panic within the hodler cohort. However, given the magnitude of the circumstance, this is arguably an expected result. What is likely of more interest is whether these spikes soften in coming weeks, which would suggest that the shakeout is more of an event rather than a trend. On the other hand, a sustained push higher in older coins being spent and a decline in LTH supply would be clear warning signs that a more widespread loss of conviction and concern may be in play. Summary and conclusions. The collapse of FTX is significant and a real black eye to the industry. It is a truly horrendous event where users of a platform find themselves trapped and have funds entrusted to a custodian lost. This is sadly a forest fire and a deleveraging event that was due to happen eventually. And as is tradition, Bitcoin and the industry will bounce back stronger. These are challenging times and remain extremely confident in the resolve of an industry, which is routinely tested unlike any other. In times like this, be like Bitcoin, resilient, robust, sound, and unstoppable. There is a road of opportunity ahead. As with all similar disasters of the past, time and dedication will heal the wounds, and this truly free market will learn from the mistakes, grow stronger, and come back more resilient than it was yesterday. This article was from Glassnode. It's a wonderfully written article. And let's take a look at the market cap, the bubbles, and some charts. Okay, here we are. Today's cryptocurrency prices by market cap. So the global crypto market cap is currently at 842.3 billion. It's increased 4% over the last day. You can see that Bitcoin is still in the upper $16,000 range. Ethereum is in the mid $1,200 range. There is some movement. It is slight. Matic is up 9.68% in the last 24 hours. That's good. Doge is up 7.35 in the last 24 hours. Ripple is up 12%. Solana up 12% in the last 24 hours. You got Shiba up 4.5%. You have Uniswap up 10.8%. Okay, Avalanche up almost 7%. You have Chainlink up 8.5%. You have Cosmos Atom up 5.8%. Let's look at those bubbles. Okay, green on the screen. That's what we like to see. So you can see down here, crypto.com up 23.6%. You got Ripple over here, 12.8. Chili's just keeps on moving on. H-bar making a move, it looks like. Lido's making a move. Algo's holding in there. Solana definitely looking better today. Quant 19%. So let's take a look at this article with Elon Musk. Elon Musk says Bitcoin will make it. 5 things to know in Bitcoin this week. Bitcoin may be bruised, but big names are keeping the faith as data shows investors have seized the chance to buy the dip. Bitcoin starts a new week on shaky ground after its lowest weekly close in 2 years. The largest cryptocurrency considerably weakened after last week's implosion of exchange FTX continues to grapple with the fallout. In what is becoming an increasingly erratic market, investors are unsure what will happen next as more firms sound the alarm over solvency and regulators step up investigations in the crypto space. The mood among the majority is intensely fearful, and even some of the industry's best-known names warn that it has been set back several years as a result of last week's events. At the same time, for Bitcoin, it is business as usual. FTX is not the first such debacle it has weathered, and under the hood, the network remains as robust as ever. So right here, it says FTX collapse followed by an uptick in stablecoin inflows and DEX activity. Investors piled into stablecoins following FTX's collapse, and an uptick in DEX activity suggests rising interest in self-custody options. That's what we just talked about. CZ of Binance and Michael Saylor of MicroStrategy urge for crypto self-custody amid increasing uncertainty. It's a fundamental human right, while Michael Saylor said self-custody is necessary to prevent powerful actors from accumulating and abusing power. Industry heavyweights have urged crypto investors and traders to self-custody their crypto assets amid the significant market uncertainty brought on by the collapse of FTX. Payments company Curve bids for BlockFi's 87,000 credit card customers. A Curve spokesman has confirmed they have been in negotiations to acquire BlockFi's credit card program customers since November 12th. Ledger hardware wallets hit by the FTX earthquake. Some Ledger users weren't able to process withdrawals using Ledger Live on Wednesday, according to social media reports. Hardware-based cryptocurrency wallet provider Ledger has experienced some issues due to massive outflows from crypto exchanges amid the FTX bloodbath. FTX implosion leads to aggressive Bitcoin accumulation for investors. The recent crash of FTX has led to massive capitulation for major cryptocurrencies, with Bitcoin trading as low as $15,682 during the last 7 days. However, the decline of the flagship digital asset has not deterred investors, as on-chain data showed that all major categories of Bitcoin investors, whales, crabs, and shrimps, aggressively accumulated Bitcoin throughout the week, according to CryptoSlate's analysis of the data. We spoke of this earlier, but shrimps continue to accumulate Bitcoin. Crab positions spike in November. Fish to shark supply surges above 6.9 million, and whales are buying. Binance to launch recovery fund for strong projects with liquidity crisis. CZ made the statement in light of the recent bear market liquidity crunch that has hit several crypto projects, forcing some of them out of business. According to CZ, the fund would be open to other industry players that want to invest. He added that more information would be provided about the initiative soon. CZ asked projects that believe they qualify for the fund to reach out to Binance Labs. In June, CZ said Binance was willing to help industry players survive and thrive even if the company did not gain anything from such help. Crypto.com becomes latest bank run victim, but CEO says it's business as usual. Concerns grow over Crypto.com. On November 11th, their CEO made a partial disclosure of the company's reserves in a bid to quell insolvency rumors. However, questions remain on the efficacy of proof of reserves in general. Namely, assets held at a snapshot in time do not give a holistic view of balance sheet health. On November 12th, it emerged Crypto.com had sent a 320,000 ETH transfer of funds to Gate.io, with 285,000 ETH later returned. Some say the purpose of the transfer was to assist Gate.io fake its proof of reserves by bolstering its balance sheet assets. He later said the transfer to Gate.io was made accidentally and should have gone to a new cold wallet storage address. Addressing the shortfall in return of funds, he said the difference has now been sent back, and we have single-digit USD million balance on Gate.io as of now. Look, guys, let's just take a look at the charts quickly, let you go. Just want to see what's going on out there. Let's just take a quick look. Okay, this is Matic, okay? Now, Matic is one of my favorites. You know, it's been beaten down, but it started running real nice up into this FTX situation. It actually, this is when it all started, and it bounced off the 200, but it's shown weakness. Okay, backing up to a 4-hour, you can see we just have some indecision, but it's trying to fight. Okay, you can see on the 1 hour, it's kind of pivoting. Okay, down, try, down, it's trying. We'll see where that goes. Let's look at a 5-minute. A 5-minute, it's starting to get momentum. And if you just look at the minutes at the time that I'm filming this, which is nighttime, you can see that it has been trying all day to push through. Let's go look at Ethereum. Okay, here's Ethereum. Now, Ethereum was in an 11-month descending pattern, and it broke out. Right at the time of the FTX, it rejected on the 200. It fell below, came above, and it is now on the outside of the descending, which is positive. You can see that closely here on a 4-hour, how it came down, fought, and it's fighting. On a 1-hour, if you zoom in, you can really see the fight to stay on top of that descending pattern. That is key that we don't fall back in there, guys. We have to fight for Ethereum. 30-minute, you can see it a little bit more closely. On a 5-minute, you can see even better, okay? Let's look at Avalanche, another one of my favorites. Now, it doesn't look like much on the daily. It's got the bottoming process. It has taken some pain. These are really good prices. I picked up more. You go back to a 4-hour, you see it broke 2 levels of support, and it's fighting for a reverse breakout. You go to the 1-hour, and you can see it more clearly. It's trying to get there, guys. We've got to have some conviction in this. You know, our algos, our chain links, our bitcoins, our ethereums. You know, Cardano, Solana. I feel bad for Solana. I bought more Solana, and I'm gonna buy more. I'm ride or die till the wheels fall off. You know, if I take an L, I take an L. I made a lot of gains. If I take an L, I take an L. I'm trying to back up Solana the best I can. You know. Whatever, trying. You can see it right here on Avalanche. The 5-minute is trying to creep, and on the 1-minute, it's just trying. It's trying, man. It's trying. So give it some love. That's Avalanche. Let's go look at Doge. We had our bottoming process, a huge push. We had that FTX. It actually held decently during it. You can see kind of pivoting down. Bottom finders went off. We're trying to hold. It's been a little bit of a tough, convictionless day. A lot of flat, sideways movement. On the 5-minute, though, starting to pick up a little steam, which is good. I like that. Let's see what happens with Doge. Okay, this is Bitcoin on the daily. We all know Bitcoin is just taking it on the chin, but Bitcoin is here to survive. It's been through worse. You can see these candles are getting smaller. The color has changed from the confluence filter back to a doji on the line of the box of confluence. That's good. The 4-hour, you could see it fell down below this one, came up, retested, went above, test, broke down, fought back up, tried to break out, failed, retested, trying to break out again. Let's take a closer look at that on the 1-hour. Here it is. Fell down, up, test. Fell down, but the body above, test, holding, up, failed, couldn't hold, and then boom, above this one, tried to break, failed, retested, and it's making another attempt to get above this line, which is 16,739. You could see closer on the 15-minute how it broke out, came above, tested, and it's trying to break out. You can probably see it on the 5-minute real good too. This is the box in this two ranges, okay? Right between 16,171 and 16,735. This is like a tight little box of confluence. It's a mini, these are mini levels, okay? This is a range. These are trader ranges, okay? We call them swing zones. There's trader ranges. So it's trying, and you can see that other traders understand this, okay? It broke out, it failed, it pushed, it tried, it failed, okay? Pivot low, lower pivot low, retest, bottom finder, try to push up, rejection, trying again. This is standard. This is how it works, okay? It's being controlled by traders. We just got to get over that line, and then we get to that next level. The next level is going to be this one, 17,169. We got to take it day by day, play by play, and step by step. Hit the subscribe, hit the like, select all. We have a Discord. Come in. I'll be with you every day. I'm in it with you. You're not alone. We got a support group. Let's look at Aave, okay? Aave was just at 90 bucks recently, okay? Boom, FTX screwed us. SBF destroyed us. Rejected off the 200. Let's back it up and see what's going on. It's pivoting, okay? What happens when it pivots? There's a pivot to the downside. There's a pivot to the upside. It's starting to get some strength. The dust is settling. On a 5-minute, you can really see it, okay? Pivot down, pivot up, okay? And just to see what's going on in the minutes, it's certainly trying. For all you guys that like Shiba, let's take a peek. Same thing. SBF screwed us over. The 4 hours looking kind of weak, but the 1 hour is gaining some strength. Let's look at a 5-minute. It's on the push over the 200. Cardano still in its range right here between this 35 and this 42, and it's on the low side at the 33 range right now. You could see it fell below, and it's on its reapproach and reattempt. There's the smooth pivot we designed for you called the Jedi green light, so you can see it. We got to back up Cardano. We got to give them some love. One of my favorites, Chainlink. Chainlink's been going sideways. It's, you know, I'm in it. I love it. I'm keeping it. I'm buying more. Okay, it's dropped down. These prices are good. If you wanted Chainlink, these prices are good. Okay, look at that on the 5-minute. It's making a move. Okay, I even want to see what's going on the minute. On the minute, it's making a move. It's trying to get on that hunt, guys. Give it some love. Get in there and then get off exchange, okay? Chili's, it, like Matic has been a leader. I mean, look at this. It got over the 200. It failed. It said, you know, we got to buy over in here. 17, 18 cents. It rallied up just like I thought it would. And then boom, Sam Bankman-Fried, the devil, destroyed us. Let's back that up for a second. Boom. Uncertainty, just like Matic. Let's look at the 1 hour. Okay? Same kind of thing, but it's trying to fight. Still convictionless, though, I can tell. Let's look at that 15-minute. Yeah, it doesn't know what it wants to do. We're going to have to be a community here, guys. We're going to have to advocate. We're going to have to fight. We're going to have to fly to D.C. We're going to have to get with our congressmen. We're going to have to make sure that innovation is available, choices are available, and we can control our future and be able to trade in the U.S. and custody our own coins. But we also need things to be safe. so that these centralized exchanges are regulated, and these people that are in power of trust cannot do this to you and I again. It cannot happen. Enough is enough. This is the moment where we say enough is enough. Which brings me to Solana. Look at Solana. Just destroyed. Just destroyed. Okay, maybe the 4 hour, there's a little bit of hope. Okay, it's trying. The bottom finder called it here. It hasn't gone below. Let's look at the 1 hour. Okay, it's kind of sideways. Got the green lights. It's not a lot of conviction. People are scared. 15-minute under the 200. 5-minute above the 200. One of my favorites, Algorand. Same kind of thing. Everything had momentum and then got pushed down. Is there a bigger agenda? Was there a reason for this? This seems orchestrated. We were moving nicely. Things were getting better in the economy. Inflation was coming down. Supply chains were easing. Things were starting to get better. A lot of the bad stuff was moving to the past, and we were working on solutions for the future. And then this happens. This is not right. Sushi. Now, sushi's been one of those ones that did really well. Went from 102 all the way up to about $2. Okay, about 100%. Got knocked down, but it's held. And it's held above its resistance, and you can see that here. Here's the bounce off the resistance. Here's the Sam Bankman-Fried, and it bounced, and it's holding. It's not moving up high, but it is holding, and you got to give it some love for that. You can see the uncertainty and oscillations going on, but still something to keep an eye on, observe, and notice that it is trying. It is a fighter. And last but not least, let's talk about ApeCoin. Okay, ApeCoin has just gotten so hurt in this situation. I have a lot of this. I'm down on this in Solana quite a bit. I'm not worried about it, though. I believe in crypto. Yeah, it's a lot of money. I just think the dust needs to settle. Crypto has these momentum rallies that show up. If you hit it right, you got money to defend your money with, you can get out. You can put 4, 5, 6, 10x into momentum, springboard out. Even if you springboard out to a minor loss or a minor profit, the strategy works. You just got to really know what you're doing. If you don't and you want to learn, I teach incredible trading tactics, showing you guys how to get high 90% win rates, huge profit factors, and I can show you all the proof of all of it. Come on in the Discord. That link is in the description. I'm going to let you go. I appreciate you watching all the way to the end. My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse.